Hello everyone and welcome into the channel. My name is Brent and today we're going to be covering the SoFi Investing Challenge Week 32, Tiny Deposits, Real Growth, Full Transparency. In this challenge, we have been depositing $25 every single week regardless of market ups, regardless of market downs. And this is $25. This is cutting back on buying tea, coffee at Starbucks, Dutch Bros, Human Bean, right? Instead of going out and buying that lunch or dinner, you're eating at home. You're buying on with a purpose, and instead choosing to invest that difference. That's kind of what we're doing within this challenge, and kind of showcasing just how powerful $25 really is. Now, normally when you're depositing $25 into a high yield savings account, it would take roughly 40 weeks of $25 deposits to reach $1,000, but we're going to go ahead and showcase within this video just how powerful $25 is invested into the market when it's moving on an upwards movement, which we've had a pretty good one here in 2025. With that said, if you guys are brand new here to the channel, would really appreciate if you go down below, hit that subscribe, also hit that thumbs up if you guys enjoyed the content. This challenge will be ending soon, and we'll be moving to a more on a weekly basis, going over the budget, living out of our portfolio style. I was just kind of waiting to start this all off here in 2026, as the budget is a 1-year budget and it works really well in this way. So we'll go ahead and cover more of that here in the future. So definitely subscribe down below. Also, check out the pinned comment if you guys would like to join the Discord, chat about the market, general information. And with that said, let's dive into the weekly performance snapshot. So this past week, the 8th through the 12th of December 2025, after 2 weeks of green, we finally hit some red. Now, we were going to end the week at all-time highs. I saw the S&P 500 hit new all-time highs here on Wednesday, pre-Fed chatter, right? Then the Fed came out, or actually, I think the Fed came out here, and the market kind of sold off a bit and then spiked. But then we see here the S&P 500 continue to trail down lower, ending the week down 0.57%. The Nasdaq lost a whopping 1.9% on the week, and we saw the Dow Jones. Here's that difference, right? Here's that split on Wednesday, where the Nasdaq and the S&P both fell. Instead, the Dow Jones actually continued moving higher, finishing near all-time highs at 1.12% on the week. So really strong there difference. Now, I went ahead and made some notes down here. Essentially, the difference why the SPY and the Nasdaq fell was due to tech-specific lows, especially within the AI data center delays between Oracle and Broadcom, whereas the Dow Jones stayed positive, green, and rose because it's weighted more towards older, less tech-reliant blue chip companies benefiting from the federal rate cut. They've already made it, so I kind of wrote this in there, but future rate cuts are going to help them out. And then the current one that took place last week on Wednesday, that 25 basis point, made it really nice. Whereas tech it's not as resilient, right? The Dow Jones companies are older, they're less reliant on tech, and they're just having a better time. They're not struggling with high valuations and uncertainty within the AI returns. Now, kind of adding into this, tech stocks, particularly within the Nasdaq, face pressure from stretched valuations and concerns of declining free cash flow, making them vulnerable to profit taking, which is what we're seeing here. People are leaving tech and moving into safer, secure areas. And it doesn't help that the whole cycle of what's kind of keeping the S&P and the Nasdaq afloat is the spending on chips, on data centers, because eventually when all this money is spent and the economy is kind of down in the drain, who are they going to be selling these services to or these products to? The normal people aren't going to be able to kind of take advantage of the AI and paying any sort of premium for it. So eventually I do feel like the tech is going to be hitting a wall, whether it's going to be here in the short term, here in early 2026, or within the later parts of 2026. But I just believe that it does take a lot of money to obviously invest into infrastructure, but you have to know the line of over investing and just safely investing. And right now I feel too many companies are out there just kind of Oracle was buying chips from here, they're buying this stuff from there. It's a cycle, and it's kind of a weird money cycle that eventually the money's going to dry up, where just because you borrow somebody $1 from somebody, you pay somebody $1, and then they pay the other person $1, that dollar doesn't mean that you're making more money. It's just being circulated, and that's kind of what's going on people's balance sheets. It's just circulation of money. But I think here in the first quarter of 2026 or second quarter, we might see a bit of a pullback for sure, just as more of that data kind of come out. So the fear meter, it actually kind of eased up. It went from 40 to 42 this past week. So fear is still within the market, obviously. The VIX meter went just a tick, right? Anywhere in the 15s is actually pretty safe for the VIX. So we saw 1541. It's at 1574. So honestly, it's not too bad right now. But we shall see how it goes. So as we can see, let's see, I call these the magma. So the magma is the Microsoft, Apple, Microsoft, and then it's just interesting, and then Google, right, and then Amazon. But so just the magma stocks, and we can see that every single one of these was essentially red here this week. Oracle went down a whopping 12.69%, Broadcom 7.77%, Nvidia 4.05%, Google 3.73%, Meta, my biggest single stock holding right here, down 4.33 on the week. I'm still positive for this one. This is a really good opportunity for kind of buying a bit more Meta in my other portfolio, so I'll probably add a bit more to this position if it continues to fall into this following week, or if it falls down back near the, I think it was $600 range, or below the 580s, 590s. That was a really good price range, so we'll see how this one falls. But yeah, there's just a lot of opportunity as these kind of ease up. I would kind of give it a little bit, right? We'll see. We'll see how this week goes. But we can see green across everywhere else. Financials, very green with that rate cut. A little bit of those healthcare looking pretty good. Industrials, right? Anything within the Dow Jones. We saw the consumer defensive, pretty green up there as well. So just pretty interesting across the board there. Now, if you guys are just interested in starting your very own journey, you guys can get started with this $25 with SoFi Invest. You can see here, SoFi Invest, you add $25. You get $25 added to your portfolio right away. Also, if you're a pro member, the SoFi Plus, by having direct deposit set up, they also give you 1% bonuses on your reoccurring deposit, which is kind of interesting. I didn't know that, I suppose, and then I deposited $25. I got a 1% reoccurring deposit match of 25 cents. So say I deposited $100, I would get a dollar. If I deposited $1,000, I'd get 1% of that, which would be what 10 bucks. But it's just kind of interesting, right? Things to consider. There's also other things down in the pinned comment below to check out other platforms, so definitely check that out. Now, in terms of how our week 32 progress went, we did fairly on with the S&P 500. Our base investment moved from 884.68 to 909.93. We had a deposit there of $25.25 because of that deposit bonus. Our previous week balance was $960.51. Our current week balance, right? We're at $979.85. We're less than $25 away from our goal with $1,000. So as we deposit cash here on Sunday, today when I'm making this video, we'll actually hit $1,000. Now, will we close next week at $1,000 on our weekly update, or will the market have a pullback? I would love a pullback to pull these companies back into valuations that make a bit more sense, but I feel like that would just kind of derail the market. So the weekly portfolio is down 0.58%. This should be in red. Our weekly change is down $5.68. Our total return now since invested in this portfolio is 7.66%, and our total appreciation is $69.71. We purchased shares at the highest shares ever at $631.47. We picked up the least amount of shares here at 0.03959 shares. And you can see our previous week balance moved from 1.52235 to 1.56194. We're now 56% towards our goal of 2 shares. And as we said here, we essentially hit all-time highs here midweek before pulling back pretty hard Thursday, Friday after that. you know, concerns. But I believe Oracle came out, it's like, no, it's not a problem. Everything is good, but we'll see how that all plays out this following week. Here at the bottom, we're due for some dividends here in December. I'm pretty sure this is in the last week of December in the 4th week, so we'll cover that as it gets there if we're in this progress update still. Okay, in terms of our progress towards our goal, as we said, we're now sitting at $979.85 of our $1,000 goal. We're 97.98 of the way there, meaning that when we deposit $25, we will be sitting over our goal of $1,000 on week 33. Now, if the market pulls back pretty heavy, that could kind of derail the end of the $1,000 investment challenge, but we'll leave it up as we do every single week, right? We go into the week with an open mind of hopefully progressing forward. But I would love, obviously, I'd love a pullback as more shares purchased equals more shares, right? As it gets cheaper, you're able to pick up more shares, which makes your future self even richer, because eventually everything, once all the dust settles and everything's gone all red, and eventually say, hey, I think we overshot it to the downside, and this company is really not worth this, right? They're bringing in a lot more money, and the valuations get kind of balanced out and come back up. So that's what I'm looking forward to. I just want some red out there because I missed the red that we had a couple weeks ago. It was some good stuff. I like that volatility. So guys, that is going to be it for this video. We also had a huge inflow of subscribers here in the screenshot. I'm at 5.79 thousand subscribers. I believe as of the recording of this video, we reached 6,150 subscribers. So if you're out there and watching this video, watching till the very end, I do want to give you a big thank you and wish you guys to join the Discord server down below. It's completely free. If you guys would like to chat about anything, I'm in there 24/7, or at least looking at it. So if you guys have any specific questions, go into the pinned comment, check it out. And that is it for today's video. Thank you all for tuning in. Be sure to subscribe, hit that thumbs up, and I'll see you guys in the next one. Bye-bye.